Good afternoon. My name is Thokozan Aidan Siria, and my colleagues there, Modesta Midima, John Chinomba, and Matthew Zalila. We are members of Group 5. In our analysis, we are analyzing the performance of TNM, that is for 2018 and 2019. That's the outline. We'll talk about TNM, services offered by TNM, the financial analysis and the various ratios, the limitations and the conclusions and recommendations. TNM was established in 1995 as the first mobile company in Malawi. The shareholding, it is a wholly Malawian-owned company with the shareholding including, with the shareholders including Press Corporation Limited, Old Mutual Life Assurance, the Magno Holdings, Nico, Livingstone Holdings, Participation Fund, Unology Holdings, and Investment Alliance Limited among the top 10 shareholders. TNM was listed on the Malawi Stock Exchange in 2008. The services offered, TNM offers a wide range of prepaid and postpaid services, which consist of data and voice connectivity. In 2019, TNM introduced mobile money named TNM Mpamba, which we did not discuss much of Mpamba because it was the Mpamba was introduced in 2019, and we couldn't compare it because in 2018 it wasn't there. Yeah. So according to PricewaterhouseCoopers 2020, the financial statements are written records that illustrate business activities and financial performance of a company. They are audited in most cases by tax auditors. The analysis of the financial statement is a method of comparing, judging, or evaluating situation of particular parts of business sheet, of balance sheet, on the basis of which important decisions are made. According to SSCI 2014, the ratio analysis involves comparing one figure against another to produce a ratio and assessing whether the ratio indicates a weakness or strength in the company's affairs. The basic ratios include the profitability and return, long-term solvency and stability, short-term solvency and liquidity, efficiency, turnover ratios, shareholder investments ratios, and others. So my colleague will proceed with the profitability ratios.
My name is Matthew Zalila. I'm here to present financial analysis on the profitability ratios especially. On profitability ratios, we've done return on capital employed for TNM, that's for 2018 and 2019. The result of 2018 was 67.2, and of that 2019 was 66.93. There was a slight decline in 2019, which might have been due to an increase in its current liabilities. Okay, our second profitability ratios, net asset turnover. This measures how well the assets are being utilized. This is a measurement of the ability of management on how it uses the company's net assets to generate sales revenue. A high rate of turnover indicates a healthy performance of the company. So in 2018, TNM had a net asset turnover of 1.69 against 1.63 in 2019. Comparing the two, in 2019, the company experienced a reduction in turnover due to reduction in sales. That's from 91,128 to 87,145. On net profit ratio, this is a ratio which measures average profit on sales. In other words, it is used to calculate the percentage of a company produces in terms of total revenue. In 2018, the NPR was at 39.62, whilst in 2019, it was at 40.97. Then we had to calculate the gross profit ratio. This shows how much profit was made after paying direct costs of doing business, which can include but is not limited to direct labor, direct material, and other direct production costs. It measures the trading performance and how direct costs are monitored and controlled. TNM had a gross profit ratio of 55.02 in 2018 and 55.23 in 2019. As you can see, there was just a slight increase of 0.21 because the company had reduced the direct costs as compared to the previous year. So let me appoint my friend to continue with our presentation. Thank you.
On the liquidity financial status ratio, we have 4 ratios. We have gearing ratio, we have interest cover, we have current ratio, and we have asset test ratio. Gearing ratio and interest cover covers, this one measures the financial risk of an organization. So on this one, we are talking of the gearing ratio. As stated in the slide, the gearing ratio measures the financial risk. This ratio is used to analyze the status of the organization. It measures the financial risk that an organization has. That's from term 2014. And as you can see, in 2018, the gearing ratio for TNM was 38.26, and in 2019 was 14. If you can see, there is a huge difference, above half from 2018 to 2019. And based on these results, we found out that from these results, the gearing ratio in percentage, they are all above 100, they are all below 100%. And when the gearing ratio is above 100%, it means that that organization is in a risky position. But as of TNM, it looks like both in 2018 and 2019, the risk was very minimal. It was below 100. And the decrease was a result of decrease in borrowing that was there in 2019. If you can look at the financial or the accounts of TNM, there's huge decrease in the borrowings in 2018 than 2019. In 2019 than in 2018. And also there is an increase in retained earnings from 149 in 2019. And the second ratio that is measuring the financial risk of TNM, we use the interest cover. And on the interest cover, it is one ratio that is used to measure the financial risk. And as you can see here, the interest cover for TNM. In 2019, we have in 2018, we have 12.81, and in 2019, we have 8.62. This is as a result of, on their accounts, TNM borrowed more in 2018, and we assume that in 2019, because in 2018, they made a lot of profits, TNM. And we assume that those profits were reinvested. It's also shown on their accounts that TNM reinvested its shares in 2019. That is why the interest decreased, because a lot of loans were repaid in 2019. So the interest covers decreased from 2018 to 2019. After reviewing the accounts of TNM, it is seen that the borrowing decreased in 2019 from 1161.8 in 2018 to 4678 in 2019. If you can see, this is more than half, at least close to times 3. So the interest also decreases in this from their accounts where it has been presented. The interest rate has also increased. In summary, on the financial risk, TNM is in a better position when it comes to their financial risk. The third one is the current liquid ratio. This current liquid ratio, because at the beginning of my presentation, I said 2 ratios, the current ratio and the asset test. They measure the liquidity of an organization, where it's seen that, where they try to measure is the organization does the organization have the cash that they can cover their loans. So on this one, according to BAWA 2012, define liquidity ratios. Define liquidity ratios as assets of an entity most liquid or easy to be turned into cash, and indicated the possibility of an economic entity to take up its debts or time. And this is the current liquidity ratio for TNM from 2018 to 2019. And for in 2018 it's 0.75, and in 2019 it's 0.5. 2018 at least they were close to 1, because the liquidity ratio is supposed to at least to be to 1 to 1. So in 2018 they were a little bit closer to 1 than in 2019. So as summary, in 2018 the liquidity ratio was higher than in 2019. This means that the company was in a better place to repay loans in 2018 than it was in 2019. This can be as a result of decreases in revenue to 87,145 in 2019 from 91,178 in 2018. And finally, there is the asset test ratio, which is the last ratio that measures the liquidity of an organization. This shows that provided creditors and debtors are paid at an approximately the same time, a view might be made as to whether the business has sufficient liquid resources to meet its liabilities. Meaning that if that organization pays its creditors, its debtors, is it going to be in a better position? So in 2018, the asset test ratio was 0.68, and in 2019 it was 0.47. This shows, a healthy asset test ratio is supposed to be 2 to 1. And looking at TNM, they had a lot of borrowings in 2018, which the company started to repay back in 2019, and this affected their liquidity ratio. And overall, when it comes to liquidity, TNM is not in a better position as seen in their accounts. Thank you. My colleague will proceed with the working capital and efficiency ratio. Thank you.
On working capital and efficiency ratios, we had the inventory turnover days, and also we have the payables. So on inventory turnover days, in 2018, TNM had 28.6 days, and in 2019 it had 22.75. This ratio indicates the average number of days inventory are held in stock. So it is only an approximate estimate figure, but one which should be reliable enough for comparing changes year on. Comparing with the 2018 and 19, TNM had a better inventory turnover days due to a decrease in an average of inventory held. Yeah. On accounts receivables, this is where TNM or the ratio indicates the extent to which the debt have been collected on time. And with TNM in 2018, it was 47.8 days in 2018, that is, and 57.64 in 2019. So at least in 2018, they could receive their, say, receivables or cash or debt in time or in a few days than in 2019. Whilst on the accounts payables, this is the money that TNM owes their suppliers. So the ratio indicates the average credit period enjoyed from creditors. In accounting, those guys in accounts, they would want more days be given before they pay debtors, so that they maintain their cash flow, a good cash flow. So TNM in 2018 had a 101.7 days, and in 2019 it was 105.6 days. This is also due to the debt that it had. If you check with the current asset ratios, they had less than 1.1, or it was about 0.6 or 0.5 thereabout. So they couldn't pay in time. That's why here it's indicating 101 days. They are taking more to repay their debtors. So on fixed asset turnover ratio, this is a ratio which indicates the extent to which the investment is fixed in fixed assets contribute towards the sales. If compared with a previous period, it indicates whether the investment in fixed assets has been judicious or not. Or in 2018, it was 2.1, and in 2019 it was 1.8. So if this ratio is greater than 1, it is a healthy ratio. So as you can see, in both years where TNM was over 1, so it was 2.1 and 1.8. Working capital turnover, according to Maheshwari and others in 2015, this ratio indicates whether working capital has been effectively utilized in making sales. So with TNM, we had a negative figure of 14.74 and minus 4.4. This was due to borrowing that it had, because the current assets were less than the current liabilities that TNM had. So this contributed to the negative figures that we got. So working capital turnover wasn't good for 2018 compared to 2019. But overall, it wasn't good in both years. For this, I will call my friend to take you over in investment ratios. Thank you.
Thank you very much, my colleague Matthew Zalira. Without wasting much of your time, I will take you through investment ratios. On this one, we will discuss more on dividend yield, being the first. The second one is dividend cover, earnings per share as the third one, and the fourth one is price to earnings ratio. So on dividend yield, this is a ratio that compares the annual value of dividends received to the securities market value per share. So on this one, as we are looking at TNM, we didn't do much on this one because there are some information missing. So we went through to dividend cover. So dividend cover, this is a financial indicator that determines how many times a firm can pay its shareholders dividends. It measures in terms of how much times can you be able to pay the dividends to shareholders. So the dividend coverage is the ratio of the company's net income. Or in other words, it indicates the number of times that a company can pay dividends to shareholders from net income. So on the dividend cover, having calculated for TNM, that is for 2018 and 2019. In 2018, it was 6.6, and in 2019, it was 5.2. So in the case of TNM, though dividends have declined from 6.6 to 5.2 in 2018 and 2019 respectively, TNM is still at a better position to give dividends 5 times or more to each shareholders. So we'll go to another one, which is earnings per share. This is a quarterly or annual number that represents a public company's profit per outstanding share of stock. EPS is arrived at by taking a company's quarterly or annual net income and dividing by the number of its shares of stock outstanding. So on this one, TNM in 2018 had 1.6 and in 2019 it had 1.3. So the earning per share for TNM declined compared to the one for 2018. This was due to the reduction on the sales in 2019.
Yeah, on limitations, there were no disclosure notes that were given by the company, which could have affected the calculation of some other ratios. And also, the ratios, they do not give a future projection since the information is historic. Ratio analysis does also not take into consideration the human element of the field. Say, for example, maybe the poor performance was to do with inability of one or some other staff members of the organization. So the ratio analysis does not take into account that human element. And also, the ratio does not take into account external factors such as the world recession and other emerging issues. Yeah, on conclusion, overall, TNM did not do well in 2019 as compared to 2018. We are recommending that TNM should put more effort on sales activities so as to improve its turnover revenue. TNM should also improve its network so that it will retain the existing customers and possibly attract more. This will increase the sales figures in return. We also recommend diversification. We applaud the move of TNM of introducing mobile money in 2019. It was a good move. And also, we recommended that TNM should reduce its borrowings so as to have a healthy performance in the future. Thank you. Are there any questions?
I've noted that you missed some of the ratios in terms of the pricing ratio and the dividend yield. Why was it that?
Thank you. I'll take that one. Indeed, we didn't calculate two of them, the dividend yield as well as the price to earnings ratio. On the financial statement that we took for TNM, we noted that the dividend per share was given, but the market per share was not given. So it was hard for us to calculate. That's why we concentrated on the two, the dividend cover and the earnings per share. Thank you.
How did the absence of disclosure notes affected your analysis?
Okay, I'll take that one. Yeah, it is important for us to know the composition of the costs which have been brought up on the financial statements. Say, for example, the cost of sales. We all know that the cost of sales are those costs which are directly linked in the production of the final product. So in the case of TNM, the statements which we had, they are just indicated the direct operation cost, which we had to use judgment as to use that as the cost of sales. But in essence, if they could have provided us with the disclosure notes, we could have known as to what was the composition of the direct operation cost. Thank you.
All right, thanks.
Okay, basically on your analysis, you indicated that you got some information and the other information were not given. I don't know why other information were not given, but based on your analysis, do you think TNM is worth investing?
Okay. Let me answer that one. From our analysis, we think that TNM is not worth investing because from the ratios, we can see that for TNM to settle their debts, it means that they will go bankrupt. They have more debts, they have more liabilities than the asset that they have. And as Matthews was presenting, he presented that on their working capital, TNM has a negative. So investing in an organization like that would be risky to the investors. Thank you.
From what you were explaining,
Thank you. We thought of choosing TNM because it's a Malawian company. and we have to fuel, especially in this industry, because if you check the competing companies, Airtel, which is an international, so we wanted to have a feel of how a Malawian company, especially on the mobile telecommunication, can be done, and how effective it is in terms of its profitability, like working capital and the like. So that is the whole essence why we chose TNL. Thank you.
Thanks.